Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. And I am your host, Kevin Horner. It finally is a white, snowy day here in the Denver metro area. Today, I am pleased to be joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How's it going today?
Going pretty good. Glad to be on with you, Kev, and look forward to this each week.
As do I. It's always nice to have a good conversation about the markets, a little bit of back and forth, and an opportunity to address what's moving, what's shaking, and what might be offering opportunity, which we will always cover here on Trader Talk. We are pleased to also be joined by Barb Armstrong, fellow coach, excellent presenter here on the channel. Barb is going to manage chat for us today. She'll answer questions and comments that Brent and I are unable to get to, but as always, we do try to bring those comments and questions to our discussion as well, so we'll keep an eye on you there. Also, follow the three of us on X, Barb Armstrong CS, Brent Morris CS, and Kevin Horner CS. X, absolutely the best way to meet up with us when we are not hosting classes for you here. So we look forward to catching up with you on X if you choose to follow us there. And then lastly, just make sure you're subscribed to the channel here. That way you're aware and notified of all of our live opportunities to participate in the shows. All right, we'll jump to disclosures here. I'll remind you that our conversation is exclusively informational and educational. We do not make recommendations. We do not endorse a specific approach to trading the market. We do, however, discuss technical analysis here, and in doing so, we remind you that we don't encourage you to make your decisions exclusively off what you see in technical analysis. We do think it's a piece of the decision-making puzzle, just not the entirety of the decision-making puzzle. All right, and in terms of our agenda, it's the same process. If you're new here, we do a top-down review of the broad market. So we'll start with our indices. We'll move off of indices into sectors on the move, maybe working to understand some of the relationship movement we might be getting today. And then, of course, we always wrap it with stocks in the news for a multitude of reasons. We've got a few to check out there as well. So as usual, we're going to start with the S&P 500, Brent. So I'm going to bring up Thinkorswim desktop here. And Brent, I got to say, I'm just going to use the word continuation because it sure feels like, even though 2 weeks ago we were feeling kind of questionable, feels like now we're right back on path, more or less.
Yeah, I mean, the trend is we had a little hiccup there, but I was thinking about this morning, in fact. Yes, we've had maybe a little harder time, but is there anything that's really screaming bearish or change in market here at this point? Yeah, we did. You know, we had a pullback, and I don't know what the percentage pullback was, but both from a technical standpoint, which is what we primarily focus on here, and from a fundamental standpoint, just in terms of news flow, what we're seeing, nothing seems to be changing in the market here that's really going to knock it off this trend. Historically, December's been a pretty good month, and I don't know what December is going to bring. You know, we're at the beginning of the month, but I don't have any reason to doubt. I don't know what it's going to do, but I don't have any reason to doubt this December is going to be any break of that trend here at this point.
Well, as usual, Brent, we're encouraged as traders. We trade with what's working, and we work with what's working until it doesn't work ultimately, and try not to jump ship before the water starts to fill in the lower levels, right? You want to let things break before you start to kick yourself off the market. Generally speaking, you know, if you're trading the trend, you stick with it as long as you can. And the reminder I'm given is, one, that we just made matching lows, not lower lows. And I've been saying that a little frequently of late. Matching lows are cool. Lower lows, not cool. So matching lows reiterate support for us. That's what the green line is there at around 65.30, 65.40. So even, Brent, a revisit of that level would be one where, if held, revisited and held, traders would look to deploy more money because it's proven to be a level off of which we can move higher.
Yeah, and that's not a bearish move if we do there. It may be showing us, if we were to go down, which we aren't yet, if we were to go down towards that level, that is a sign of maybe a weakening upward trend, or maybe even just a sideways channel formation. It's not really a trend reversal at that point until we break.
Yeah.
Until we break that low, then then the narrative starts to change a little bit right now. I'd also
Yeah.
point out, for the past, what do we got? We have a year chart. Really, that 20-day moving average. How long have we been above that 20-day moving average? I mean, since April, since the lows at the beginning of April, pretty much.
Mm-hmm.
And we broke it, which is fine. It's not the end of the world. We're back above that too at this point. So the moving averages have been I mean, that's the reason why people use moving averages. I mean, one reason. Moving averages are a pretty versatile technical indicator, but helping you to decide on trend is one of the key things that people use moving averages for. And so it just, because sometimes when you're looking at trends, you're going, oh, higher high, higher low. You're trying to discern what's a low, what's a high along the way. Well, I'll tell you this, if you're looking at a moving average and the stock is above the moving average and the moving average is sloping up, generally we're going to consider that an upward trend. Okay, let me reverse that. Let's say the stock is below a downtrending moving average. We're generally going to consider that a downward trend. Now, sometimes you get these kind of mixed signals where the stock is below an upward sloping moving average, then it's a little bit more of an iffy period. Now, let me answer the question that maybe hasn't been asked, but people are thinking, Brent, there's different moving averages. How do you know? And the answer is, yeah, there's different trends. If you're using a shorter term trend, like a 10-day moving average, then we're talking about a short-term trend. If we're looking at something like a 50-day moving average, then that's more of an intermediate term trend. So you can use moving averages to help you decide on trends. If you're struggling with the whole higher high, lower low, which low to use, which high to use in terms of establishing that.
Yep, I think that's a really good explanation, Brent. We get that question all the time. Which of these moving averages do I need to be watching, right? It's always a challenge. I think it comes with a time, right? The 10,000 hour principle that you've devoted a substantial amount of time to watching these charts and understanding trends and the way price action moves and building that into our own trading process. Just a quick example, everybody. We mention all the time that we're not endorsers of a process, but we want to give you ideas for consideration. Well, when you're looking at a combination of, say, Brent, the 20 and the 50, the orange and the purple moving averages on the SPX, some traders are going to tell you, hey, I'm staying with everything I own in the SPX as long as we stay above the 20-day. If we close below the 20-day, I'm going to sell some. And that lightens the position, that gives them comfort. If we get back above the 20-day and back on trend, some would say, let's go ahead and add those dollars back to the position. And conversely, if we broke the 20 and then got to the 50 and broke it, they would sell even more. So there's just a process and a plan involved that many traders will try to follow. And our encouragement is really to go about defining that plan, that process for how you want to approach the market in a manner that gives you comfort every step of the way, which is really all trading is about, trying to be comfortable with what you've deployed to your trades.
Absolutely. And there's no magic bullets in the market. There's no like one indicator, whether we're talking moving averages or RSI or whatever, that's going to tell you exactly, give you perfect signals to buy or sell or whatever. But one thing they do is they give you this kind of objective, repeatable measure that you can use to help make decisions, when to deploy more capital, when to pull capital out, maybe when to readjust a stop loss, things like that. It won't be perfect, but if you use a repeatable objective measure, then you can kind of go back historically and go, hey, this is the measure I've used. How well is it working? And then, at some point you may decide to change your system a little bit, but otherwise you can get ruled by emotion, which we talk about a lot on this show. And instead of just going out with your gut feeling on things, using this measure, imperfect though it is, it can help you with your system, with your trading system.
That's the idea. Just understanding probabilities, leading us to be more invested or less invested, and doing that to our own comfort ultimately. And that comfort is the same as risk tolerance. So just keep those words kind of side by side. They are essentially the same. A couple of key takeaways, Brent. I'm going to move off of the SPX to the NDX, and yet I feel like we can answer a lot of these details. Number one, the drawdown on the SPX was less than 6%, about 5.75 from the peak here in late October to the bottom we made just a couple of weeks ago. Number two, we've got a question about RSI, or at least a comment from Chris noting that the RSI trend suggesting a little bit of weakness or choppy markets. And that's not wrong. That's entirely true here. Even in the NASDAQ, you can see lower highs in the RSI. But Brent, a lot of traders would say that that's what happens when we get into those consolidation windows. Yes, we've got a declining RSI even in the NASDAQ here, and yet the trend remains bullish to the upside. Have we potentially worked off some of that RSI negativity that you're seeing, those lower highs in the RSI? Are we working that off through consolidation or sideways motions here?
Yeah, I mean, in a way, it can be kind of a positive thing to get these pullbacks in the market and the associated pullbacks in the RSI, in that, very often people get a little concerned if the market has just gone up and up and up without much of a consolidation period. You start to hear more discussion of valuations, more discussion of overbought conditions and whatnot. And by having the pullback, I mean, we're not bad. I mean, yes, we had you said a 6% pullback in the market as a whole, but we've gone back half that way at least or more. And yet we were able to maybe, I don't know, lessen some concerns about how frothy the market was perhaps at this point. Same thing with that RSI. Yeah, we have some lower highs on that RSI, reflecting what we saw kind of on the stock or the index at the top of the page. Some more weakness there. We'll see. We'll see what happens, but it's not necessarily a terrible thing there.
Yeah, I think it's common. We're going to get some divergences with the RSI, especially in the midst of these periods of consolidation when price stops making new highs in the short term. And we haven't made a new high, obviously, for about, what is this now? About 5 weeks. Okay, so 5 weeks of pullback. You'd expect the RSI to be weakening a bit, right?
That's right. And we've seen divergences before, Kevin, on this chart. You can find divergences there, like September, October. We had a divergence on that RSI with the market, and that sure enough, the market just kept going up after that. So it's not the end of the world. And you can go back in history and find divergences happen quite often. So in and of themselves, it's not like a sell signal tip for most investors.
Yeah, that's a good reminder. I think a lot of traders look at the RSI maybe more for confirmation as opposed to denial. And what I mean by that is you could look at it and say, hey, the SPX and NDX are making moves or still staying in trend. The RSI is giving you bearish divergences, but do you use the bearish divergence as a reason to be exiting SPX and NDX positions? Not every trader is going to feel like that. They're probably going to lean more into the trend itself, utilizing price action for a reasoning to reduce position size and what have you, as opposed to the RSI divergences. Divergences tend to be weak signals, weak sell signals, that might be.
Yeah.
Okay. Now, Brent, the one thing I want to point out with the NDX is basically the same in the SPX, is that if we look at this over a longer window of time, it's always okay to pull back and watch the weekly. You might have been concerned last week on that daily or 2 weeks back with the levels that we hit, and you'd be perfectly fine for that. But if you look at the level to which we retreated, my green line here is the 20-week moving average, Brent. And if we just go back to when we started to really work with the 20-week, after we bottomed in 22. Remember, 22 was a real rough year for us in the NASDAQ. But when we got ourselves back in gear here, utilizing just the 20-week moving average, let me highlight this. It has been an opportunity, right? I mean, especially now since April. My goodness, if you just stuck with it based on that, a lot of traders would have no reason to move on from NDX positions.
And that's a very rational approach to the market. Is especially for longer. This may attend to, people that don't want to be quite as active in the market. Sometimes they'll use longer term moving averages. 20-week moving average is equivalent to a 100-day moving average, by the way. Earlier, when I was talking about different trends, I didn't mention it, but yeah, you go to the 100 or 200-day moving average. That's going to be indicative of the long-term trend. And as long as the stock is above that long-term moving average and the moving average is sloping upward, you could probably consider that an upward trend. And we've had a lot of weeks above that moving average, and that general trend has been strong for a long time. And yeah, your performance probably would have been pretty good if you just kind of went along with the 20-week moving average at that time.
I just like to be reminding our viewers, Brent, that looking at your trades and your charts over multitude of time frames is super important.
Yes.
We can't get, because it's easy to get bogged down on a day-to-day chart and get away from the knowledge that a daily chart is often just noise. It's the weekly charts that really develop the trends, the longer range trends that are much, much more reliable. And I think that's a good reminder as well. The longer your trend has been in place, the more likely it is to continue. It doesn't mean it's going to continue in perpetuity, obviously, but it is more likely to continue. So the tenet of technical analysis, Brent, is the longer, the stronger. And the longer it's been in play, the more likely it is to continue until it doesn't, right? And then when it doesn't, we make changes ultimately. So, okay, Brent, I'm picking on the Russell now. We've actually got a nice little 0.5% move in the RUT today. Small caps held up really well in the last week. Basically, looks like they're building a bull flag here after popping back with the expectation of the rate cut coming back pretty strong here in the last 2 weeks.
Yeah, it'll be interesting because we do have that flag pattern. Assuming we break out, which isn't a guarantee, but if we do break out to the upside, we have some level of potential resistance up there just immediately ahead. In other words, the highs. Are we going to break to a new all-time high on that, Russell, or not? But yeah, we'll have to see. We had a jobs report, an ADP report that came out that was not good this morning, Kevin. And so if anything, I would think that would bolster the odds, which were already pretty high going into this Fed decision. If anything, that should bolster the odds of the rate cut, which the Russell 2000 likes. But it can be too much if people are too concerned about a weakening economy, although that increases the chances of a rate cut. At a certain point, people could be more concerned about a serious recession, which you probably would not expect the Russell small caps to do very well during a recession. So there's kind of a happy medium for small caps there of not enough good news that we're going to jeopardize the rate cut possibilities, but not too much bad news that it's really going to signal a serious recession.
Good points, Brent. One of the things that we have to look at as it relates to here, and you called it out, is yields. I did pull up the CME Fed tool, does suggest that traders are positioning right now for a 25 basis point cut, 89% likelihood now this morning. So we're back to where we were just, a month ago in terms of expectation. Yields continue to stay in a downdraft. That failure at my trend line just yesterday, Brent, doesn't mean that I got the trend line right. It just means I'm good at manipulating that trend line once price action validates it. But ultimately, it is still a downtrend. And as long as that remains the case, we would probably anticipate seeing Russell small caps essentially continue to be a little bit buoyed. Doesn't mean they're going to continue to run, but they will probably remain buoyed a little bit. Now, we've had a bit of a move here. I wanted to talk about quickly with regard to the NASDAQ. So I want to look at the intra-period, and we didn't start as strong as we wanted, obviously. We've been dancing below our pivot. Quick reminder for those of you unfamiliar, our pivot points in here. The purple is the true pivot point, and what that is a calculation of yesterday's price action, open, high, low, close, etc., to give us an equilibrium price around which the day's trading should reside. Now, in terms of utilizing the pivot points, the fact that we opened below the pivot can tell us that it's important that we hold the level that we bounced to or held here, this support one, which is a variation of the open, high, low, and close, essentially deviation moves, right, Brent? So basically giving us an insight to short-term, very short-term potential support and resistance areas. The thing that I thought was notable today, Brent, was that this pullback coincided with some news on Microsoft, and I wanted to show the tech space that we opened red already, and then we sold down a little further. But take a look at what happened to Microsoft specifically. So this is technically technology specific, but also Microsoft specific. And the headline that I came across here is that Microsoft is lowering their AI sales quotas as customers are resistant to their new products. So that is not a win, obviously. And the stock itself is kind of taking it on the chin here. We're off about 3%. But that could be a significant development, Brent, because a lot of the headlines as it relates to AI spending has been boost, more. And anytime we get a change to that, it's liable to be market moving.
Yeah, it's so the whole AI spin thing. Companies have to do an AI spend, especially Microsoft. These big companies are doing an AI spend, and the question is, how much is that going to how much are they going to be to monetize that? And there's different answers, but given the massive amount they're spending, shareholders definitely do want to see that return on investment from the company's standpoint. And anything that kind of shows that maybe that's not going to be quite as straightforward as you just spend more, you make more. That kind of hurts the narrative a little bit. And so there's some, I think, legitimate investor concerns in that regard. So this is a 1-year chart you have up now. So we were looking at the intraday or before, and we were seeing weakness. Well, you can see some pretty significant weakness we've had since October? I mean, we're off, I don't know what percentage that is right now. That's over 10% since October, certainly. And that's a pretty significant drop in tech. And we've seen that also in, the technology hasn't been the strongest sector of late, unlike it has been quite often when it is the market leader.
Yep. Very, very true. In fact, Brent, I was talking about this one recently because this looks like on the daily, and I just wanted to touch on this from a technical analysis, maybe education standpoint. Brent, this looks like a double top. We were in a range. We had a peak that we pulled back from, hit support, another peak, hit support, and then broke support. Now, Brent, if I'm right about this being a double top and then breaking through the red line, that red line being the neckline of that double top, well, we broke it, found the 200-day, bounced in a relief bounce into the downtrending 20-day, under which we've been since October 31st, so basically since Halloween. And ultimately, this looks like the continuation of that downtrend as opposed to any bounce back. And so I was speaking about this just yesterday, how the importance of getting above this level was there. And as you can see, that now presents as a rejection. So not ideal for Microsoft, and the potential exists for more choppy days ahead for one of the biggest in the Mag 7.
Yeah, no doubt. And they're not alone. IT is the worst performing sector over the last month of our sectors. So just be aware of that. And you got relative strength there. And that should probably pop up as the, I don't have that exact indicator on my chart right now, but that loads, that should pop up as probably the worst one on the list there. And, Microsoft is kind of indicative of that right now as we look at this. And there's some others, consumer discretionary, not doing so great, no doubt.
It's true.
And let's see.
It's bounced back. And,
Yeah.
we should also point out that a bounce back and hold is almost as good as it continuing to rise, isn't it? The fact that it hasn't given anything back after breaking through the 50-day at least is a bit
Yeah,
optimistic.
that's what we were seeing earlier with the S&P 500 when we were looking at
Mhm.
that is, hey, it pulled back, but it's been recovering here. So that maybe takes a little bit of the concerns about being overbought out of the equation, and ultimately can allow it to continue to go up in the future. But yeah, it had a pretty significant pullback there for a while.
Yeah, it sure did. And very, I mean, that's a healthy drawdown, peak to trough here. That ended up being about 11% on discretionary. And then other movers we're seeing here, again with yields pulling back a little bit, rejected at the downtrend line. You're getting a bit of a bounce today, a little bit of a bounce, I should say, here in utilities, a little bit of a bounce in the REITs as well, but REITs are really not going anywhere. This is just stable, trading within the trend. You can
Yeah, that's a
stick
pretty
with
good channel there.
that. Just basic, right? Just stay in the
Yeah.
channel. And then if the channel changes, if you trade below the channel, below the green line, traders move out. If you trade upward through the red line, traders move in. They just position for the next trend. What often happens, everybody, after a consolidation as lengthy as this, I mean, generally after any consolidation, Brent, once we break consolidation is when we start to trend, right? Whether that's to the downside or to the upside,
Yes.
always remains to be seen. But that's why traders generally wait. If you're a trend trader, you're waiting for a break of a trend.
Yeah, just to say that a slightly different way. If you get a breakout to the upside above the resistance line, that would be considered bullish by a lot of traders. If we get a breakout to the downside below the green support level in this case, that would be considered bearish by many traders at that point. So the pattern right now is a kind of a TBD pattern as to which way that what traders may decide to approach it. That's true for a lot of patterns too, by the way. Even if they're kind of presumptively more bullish or bearish, once they take the breakout to the bullish or bearish side, then the posture is confirmed, and people will trade on acting on that often.
Yeah, that's commonly the way that most will. Now, there's obviously the opportunity to trade the range itself, being a comfortable buyer at the support level and a seller as we move to the resistance line. Many a trader is going to find comfort in trading the actual range itself. That's also a possibility here. Energy is moving a bit today. It is up 1%, but it's still mired in its trend. So we've not really gotten outside of the major portion of things here. If we looked at it on a weekly chart, you can see what may happen if we can get above my downtrend line in red there. There's an opportunity to extend energy, but I got to say, we don't want to see it, if I'm being perfectly honest, because if energy breaks out, the potential exists for oil. But I think oil still a story about supply, isn't it, Brent? That supply has just kind of flooded the market, and that's why oil maintains this low level, which remains disinflationary for us, which is fine, totally fine.
Yes, exactly. That's a good thing. I know that there are some, there's a segment of the economy, probably a lot of it in the, Permian Basin and in Texas, that the energy that would be cheering for higher oil prices. But for most of us, oil being low is probably a good thing. Think about it on an individual level, and also think of it for the inflation level there. So yeah, it's mostly we have plenty of supply, and global demand doesn't seem to be pushing it much at this point at all.
Yeah, not at this point. And I'm also noting, Brent, that we've had a bounce back in one of the more, and we just looked at a future here on oil, and we're going to do the same on Bitcoin very quickly before we get to another area. But I got to talk about Bitcoin briefly because, if nothing else, there's been a pretty healthy pullback here in Bitcoin.
Oh, no
It
doubt.
is bouncing. But Brent, look at that 20-day moving average. This presents as though it were a bit of a bear flag, doesn't it?
It sure does. I mean, we've had a significant drop down in Bitcoin. And the thing with Bitcoin is it had been pretty correlated to the market, to the more risk-on aspects of the market for quite a
Yep.
while. We've had kind of this breaking of the correlation of late, where it's really gotten hit hard here, and we'll see how much it bounces back. But right now, you're right, it does look kind of bear flaggy. We'll see if we can break above that 20, or if we break below the bottom of the flag there, which would be quite a bearish sign in that case. So yeah, I mean,
Sure.
there's a lot of I think this has been kind of has shaken a lot of investors who have been very crypto bullish lately, to see the especially some more maybe novice investors who have there's been a lot of popularity of people getting into crypto lately. And I don't know, when I say lately, over the past year, I don't know where it's going to go from here, but it can shake investors, particularly a lot of times younger investors who are just getting in and think this is their ticket to riches, when you get a pullback as much as it has. And so, we'll see where it goes from here from a technical standpoint, though.
The tricky part is, Brent, that if you're not familiar with trading and trends and technical analysis, and what you've been hearing for the better part of the last 2 years is that, Bitcoin only goes up. Well, then suddenly when it's not going up, anybody that's been a hodler for the last 2 years is wondering what's going on. I don't understand. It's not going up anymore. And you get bogged down by your emotional tie to the investment, and you don't want to be wrong. You don't want to sell out, and you have to deal with these machinations. And it's not to suggest that it's not going to eventually get back on trend and do what it needs to do. But in the interim, it could be a very bumpy ride. Now, I'm highlighted here, Brent. We took out the 20-day back on October 10. That is 7 weeks ago, and we've been below the 20-day, and rallies into the 20-day have been your selling opportunities, or opportunities to consider alternative options in here, and we're right back there right now. So had to bring that up from a trend standpoint. I thought that was an important discussion, because additionally, Brent, as I move off of it, the reminder has to be that Bitcoin is a little bit of a proxy for the comfort of traders to take risk right now. And that's changing, so it's notable. Now, Brent, our leader today, I was noted here, a couple of you are commenting on transports. I did want to call out, somebody mentioned it, so I was looking for the name and I'm missing it all of a sudden here, but transport's leading. Yes, Dom, thank you, Dom. Transport's leading the day, up 1.8%. This group is finally moving to levels we haven't seen, Brent, and I got to know, is this notable for us? I mean, this could be a very significant development.
That is, so it probably begs us to talk about Dow theory here a little bit, Kevin, and that is, hey, there's a specific focus on transports and industrials as well, and there we go. And
there you go,
can see the trend on those, and
Ask
there was
a shall receive.
You're ready there. There was, if we go back, now these are weekly charts. Go back a couple weeks on transports, and you can see there is some questions there on that. What was going to happen there, and a potential resistance level. Well, we've broken through pretty strongly right now. That's a strong sign for the market. I mean, with Dow theory, we're looking for general trends, and specifically, we're looking for industrials and transportations both to be heading up, and they're both looking pretty strong right now. And it wouldn't surprise me to see a flag at some point after the big move we've had, but that's not a bad thing. They can still be a continuation pattern of being a bullish continuation. But that's a positive sign for the overall market when you see that.
Yeah, it really is. That is a nice development. I wanted to, because obviously we have the industrial having recently made new highs, and it's been a long time since we've seen transports making new highs, but this is a positive development over a longer term viewpoint, not a negative, as odd as that might feel. So I wanted to also take a quick look utilizing our Market Watch tab. We'll go to the heat map just to kind of give you all something else to consider. When we open this up, everybody, we go into, industrials, for example. You can start to see where we've got ground transport, right? So we start thinking about transport. Well, ground transport can be a big reason. We do have big, nice green candles today on Uber, Old Dominion Freight. So there's a trucker. Same with JB Hunt up today. And then your rails are up. Those are all green too. So, those are not negatives as it relates to the transports either. So like to keep an eye on this. And don't forget, you can continue, by the way, to open this stuff up, everybody. As you open the list over here, you can get a lot more granular as you prefer. So don't forget, if you want to get into aerospace, take a look here. You can see we're going to be getting a bit of a breather. I wanted to quickly hit on Boeing just from a teaching moment standpoint, Brent, because Boeing, its chart is really intriguing to me yet again. I mean, if we looked at just the 50-day on this, boy, pullbacks to the 50 were excellent chances to participate. But Brent, that's about as good a definition of what once was support can now become resistance as you're going to find.
Yeah, that's a pretty clear trend change from uptrend to downtrend. And now we're testing it. Are we going to bounce off our moving average there on that? But that's a strong reversal on Boeing, and Boeing obviously fits the narrative of transports we're looking at here. And this has been kind of a lagger, but I'll tell you what, the last few days, a lot of strength riding there. We'll have to see where we go. We're down a little bit today. We'll see if we break through it. We'll have to wait on that.
Yeah, it was a really, really big candle move yesterday. Nice big gap move as well. If we apply those moving averages back, you'll see that we finally got it back above the 20. The question is whether this is with conviction or not. If it's not convicted move, then we'll probably pause at the 50 and need to set up a higher low would be the expectation for a lot of traders. When you're breaking that downtrend, reminder, it doesn't happen in our time frame. It happens in the time frame of the market. So rarely does the market move in our window of time. We did have a great question asking about Uber specifically, because noting the move in Uber. So let's use this as our dovetail to stocks in the news this morning. Uber and Lyft both got upgrades today at AREIT. Upgraded Uber to buy from neutral, new target at 125. That's about a 30+% premium to where we are, even though we know that's no guarantee to be achieved. And then they also upgraded Lyft to neutral from sell, and their target on Lyft is 20. So it seems to me that even though they've upgraded both, they are much more bullish on Uber than they are on Lyft.
Yeah, but you got kind of this nice W pattern there on this on Lyft here, and we'll have to see. In fact, you could almost say, well, this is going to be a head and shoulders type pattern. If you look at that left shoulder, that's a potential resistance here on Lyft. We'll see if we can break above that or if it breaks down. At which point, then we'll be looking down closer to that 19.5 level or something where there's a potential support. If we break below that, then that would be a true bearish reversal pattern. But we're a long ways away from that at this point. Right now, short term, strong momentum on Lyft.
Yeah, strong momentum and some pretty well-defined zone of support in here with a couple of tests at that same basically 19 level or so. Your RSI holding up as well, reasonably well. But the fact is you're now back above the 20, the 50, and you've been above the 200. So this is an improving chart. A weekly look at this is really intriguing to me, though, Brent. And I know I don't want to dawdle too long here, but the fact is, look, Lyft has moved through a very significant level. This could be a very important opportunity when you consider it's consolidated after break. Basically, this is all bottoming action. And now that it's consolidated after having bottomed like this all looks like a spot where traders would look to enter. And then if I take that line and duplicate it, we've got a huge gap move. Essentially, this is probably an earnings-based move in April of 22. but that leaves an incredible zone of potential move, doesn't it?
Yeah. Hey, this is perfectly highlights what you mentioned earlier, Kevin, and that is why we look at different, look at different time frames. It's important to look at different time frames, and this is just not a view you'd get on the 1 year time frame. So I think that's important. I'm glad you brought that up.
Yeah, that's pretty intriguing, if nothing else. So let's hit some more of these. We've got an upgrade on American Eagle today. Can't say that I'm expected it, but that's because I haven't been watching it, Brent. What an awesome looking chart here of late. A beautiful move, working against a very short-term 20-day moving average and just recently clearing the annual highs, essentially moving to new 52-week highs today with a fantastic gap move. They were upgraded at JP Morgan to neutral from underweight, new target at 20, up from 14. Market seems to think 20 is way too low.
Yes, and it is an interesting gap move. Often after the stock has moved as much as it has lately, you're going, well, it's ready for a pullback, a consolidation. Sure enough, that's what happens. You got the earnings. Anything can happen into earnings, and that's when you're when you see a gap. It's very often it's on earnings. We saw that last time it had earnings, big gap up, and so we'll see.
And then looking at the last peak there was around 26. So always pull back on that chart, look at it from a 30,000 foot view, see if you can find some other levels of potential resistance and what have you. But just kind of keeping an eye on that one. Yeah. And then there was some news on CrowdStrike, of course, and let's talk about that. Because we had some price target bumps on CrowdStrike, but they're not reacting in a manner that would be commensurate with that type of action. In fact, what you've seen was a weak open today, and the stock has bounced back only off 2.5%, but it did open weakly following things. Now, Piper Sandler did upgrade or raise their target, not upgraded the stock, but new target at 520 from 450. UBS raised from 580 to 590. Bernstein raised from 343 to 353. These don't sound like negatives to me, Brent, and yet the market took it as an opportunity. So, there's nothing on the chart that stands out other than maybe this last gap move, which has now been held. So you've kind of got a little bit of a short-term uptrend being maintained.
Yeah, I've got a support bounce there. And so all in all, not a great day, but I wouldn't call that, a super bearish chart at this point either. So we'll have to see on that. And there's one other thing I want to bring up because I know we're running out of time here, Kevin.
Yeah, please go ahead.
And that is, if you look at the S&P 500 right now, it's basically, I think we're about break even right now on the day, down just a smidge on the SPX right now. If you go and look at, go to the Visualize tab real quick and just look at the S&P 500. What you're going to see is a lot of green and just a little red. Right now in the S&P 500, 361 advancing issues, 140, it's changing as we're going, 140 declining issues. Overwhelmingly a bullish day in the S&P 500. And you can see that listed in the upper left there, but you're not seeing that in the overall market index. That's why that index sometimes can be a little deceptive as to deciding what's the market as a whole doing if you consider all the stocks, not just kind of the big large cap movers.
I so appreciate you bringing this up, Brent. It afforded me the chance to highlight the fact that, yes, we see the Visualize and the heat map frequently here, but we don't always go to Index Watch to get our advancers and decliners, and that makes sense to pay attention to such things. So thank you for bringing it up. And then if we looked to see where are our laggers, well, you've got ALB, Albemarle there, and you've got ARE also down. But yeah, Brent, what is this? 36 to 12, essentially, advancers versus decliners this morning. So the fact is, our biggest positions are the weakest of the day. And that's not really a surprise based on what we've seen we talked about Microsoft a little bit. And if you look at the red, the deep red on Microsoft and one of your biggest positions, deep red in Micron, deep red in Broadcom, and deep red in Netflix. So, some of your larger positions are reflecting pauses to their recent trend rather than continuations. But that's why the traders like the S&P, Brent, is because it offers such a wide variety of sector allocation compared to other indices. Everything else is kind of tight.
Yep, and that's why it's important to be familiar with the tools on Thinkorswim so that you can just be aware of where to look on these things.
That's the idea. That's what we try to do here, Brent, on Trader Talk. We try to educate and inform. That's why we are here. We want to thank you all for joining us today for what we hope was a good conversation for all of you. Please follow the three of us on X, Barb Armstrong, CS, Kevin Horner, CS, and Brent Moore, CS. Hit that thumbs up button down below for us. That'll help us out in the YouTube algorithm when we get this reviewed and archived and ready for other viewers a little later today. But certainly stick around. We've got more coming for you here this morning. As always, it's live all day on the channel. So we appreciate you joining. Hope you have a fantastic rest of your Wednesday. We'll see you all again real soon.